Apple is entering an important moment, and investors are watching closely. After a difficult period filled with rising costs, global trade pressures, and questions about innovation, the company is trying to reset expectations and regain momentum. For a business as large as Apple, even small changes can have a big impact on financial markets and the broader U.S. economy. Over the past year, Apple faced several challenges at the same time. Higher tariffs increased costs, supply chains became more expensive, and some internal software issues raised concerns among investors. When uncertainty rises, markets tend to become cautious, even with companies that have a strong track record. However, as we move forward, many of those pressures are starting to ease. Trade conditions are stabilizing, operational problems are being addressed, and management appears focused on execution. That does not mean the road ahead is easy. One of the biggest challenges Apple continues to face is higher component costs. This is not just about memory chips. Apple relies on a wide range of materials, including advanced glass, circuit boards, and specialized electronic parts. Demand for these components has increased sharply, especially as data centers, artificial intelligence systems, and cloud infrastructure continue to expand. Glass, for example, is no longer just used in smartphones. It is now essential for data centers and advanced computing equipment. As more companies rush to secure these materials, competition increases and prices rise. Apple must now manage these higher costs while maintaining profitability. To deal with this, Apple has been using long-term supply contracts and building up inventory. This allows the company to reduce sudden cost spikes and maintain more control over its supply chain. Still, higher costs cannot be fully avoided, which brings up an important question for consumers and investors alike. Will Apple raise prices? Historically, Apple has had strong pricing power. Its brand loyalty, ecosystem, and premium positioning give it more flexibility than most companies. That means Apple can gradually raise prices without significantly hurting demand. These increases are likely to be measured rather than dramatic, but even small adjustments can help protect profit margins. For investors, pricing power is a critical advantage during periods of rising costs. At the same time, Apple is preparing a new wave of products designed to support future growth. The next generation of iPhones is expected to arrive later this year, including new form factors that could reignite consumer interest. A foldable iPhone has been widely discussed, and if successful, it could help refresh demand in a market that has become more mature. Apple is also making a stronger push into the connected home. A new home-focused device, often described as a central hub, would mark a shift in strategy. Until now, Apple has been relatively cautious in this area. A deeper move into home technology could open new revenue streams and strengthen Apple's ecosystem inside everyday households. Another notable change could be the introduction of a lower-priced MacBook. Apple has not emphasized affordability in its laptop lineup for many years. A more accessible model could attract students, small businesses, and price-sensitive consumers, expanding Apple's customer base without sacrificing quality. Beyond hardware, services remain a key driver of long-term growth. Apple's services business generates recurring revenue and higher margins compared to physical products. As hardware upgrade cycles slow, services provide stability and help smooth earnings over time. This part of the business is becoming increasingly important for Apple's overall financial health. Artificial intelligence is another area where investors want clarity. While some technology companies have moved aggressively into AI, Apple has taken a more measured approach. The company has focused on privacy, on-device intelligence, and practical use cases rather than large public demonstrations. This strategy may appear cautious, but it aligns with Apple's long-term brand and regulatory priorities. Apple is expected to increase AI-related investment while also cutting back on projects that are not delivering results. Wall Street often supports this type of discipline, especially when spending is paired with efficiency. The goal is not just innovation, but sustainable growth. Market sentiment toward Apple is gradually improving. Several analysts have raised their outlooks, pointing to better execution, stabilizing costs, and new product momentum. Investors who remain confident argue that Apple does not need rapid growth. Instead, steady progress across multiple areas can still produce strong results given the company's size. That Apple's future growth will not depend on one product or one quarter. It will depend on how well the company manages rising costs, expands into new markets, strengthens its services business, and adapts to an AI-driven economy. What Apple does next will influence technology supply chains, consumer spending, and overall market confidence. As one of the most important companies in the world, Apple's direction matters far beyond its own balance sheet. It plays a major role in the U.S. economy, global markets, and investor sentiment. It will continue to track how Apple's strategy develops and what it means for markets going forward. If you found this report useful, like the video, share it, and subscribe to Economic News USA for clear and simple coverage of U.S. economic and financial news.